All right, welcome to Charts and Coffee. Good morning, everybody. We just finished looking at the 8:30 non-farm payroll hot zone in the Sector Secrets Mastery Room this morning. So shout out to my Mastery members. Shout out to the folks in the free trading room here at Simpler as well. Great to see everyone. Just a quick couple things here. You can see some of the notes that I was making for the members as we were looking at a potential setup. We had determined, based on just some basic line in the sand, consensus, etc., that the S&P would be the market to focus on, and the focus would be to the long side. The opportunity rests in, as the volatility occurs during the event, can we get a wick into a support zone? And that's really the way that I'll look at all high impact, high heat, high psychology, high volatility, right? Hot zones, these very impactful economic releases. And it does seem, now let me mention something else, because in yesterday's free video, I want to mention to everybody, if you haven't checked that out, let's see here. Yesterday's free video, I talked about one of my absolute favorite, really simple patterns. It's probably one of the first patterns that I learned as a young trader, and I still use it today. It's called a minor high and minor low. And by the way, it's a pattern that's built into the way in which the Darvas 2.0 and Darvas 3.0 indicators plot the automated support and resistance on our charts. So there you go. My favorite Momo pattern. I use Tesla as an example, but the S&P would equally be applicable. So if you haven't checked that out, please do. Oh, by the way, Henry had a great free video yesterday too. So I know a lot of you checked that out. The perfect exit. Love that. As soon as I saw the title, I thought, got to check out that title. But check out those two free videos there, and the minor low explainer that I put in there. Here's your signal to look out for the minor low. The minor low confirmation is as price breaks higher through 39.71.5 on the S&P futures. However, yes, non-farm payroll did help catapult price through that, but I prefer to usually see that minor low confirm after 9:30. Today would be an exception because clearly the kind of sentiment and attention and volume that we saw at 8:30 would certainly be sufficient to reflect a broader opinion of whether or not that resistance level merited being broken. So non-farm payroll would be a really reasonable sort of exception to the 9:30 rule, because we do have attention, we do have volume, and therefore that break is great. All right. So moving on to, well, that's what I'm looking at here this morning, and both free trading room and YouTube. Let's go ahead and get to the best part of the show, which is you and your questions. So let's get to it. Let's open this up to first up. All right. And I'll probably flip back and forth between the Trading View and the Matrix, the Trading View charts and our Thinkorswim. All right. So first up, Sam K asks, good morning, level 51. Thank you, Sam. Could you please define and perhaps give an example of a fade? So define, sure. Let's start with defining. A fade is selling into strength, momentum. I'm buying into weakness, momentum, not counter trend, counter momentum. That's really what it is. So an example would have been what I wanted to do this morning. Where's my drawing tool here? Where the heck did I put my little drawing tool? It's right in front of my face somewhere. Oh, there it is. Okay, there it is. So a fade this morning that I wanted would have been if on non-farm, the price action, and this is a weekly chart, is it? Yeah, that's no good. Want a nice 5-minute chart. There we go. Okay, so that would have been selling off weak momentum into a zone of support. That's a fade. And in that zone, I want to be a buyer. That's a fade. So Sam, that was exactly what I was looking for this morning. Thanks for the question. Before 8:30, hey there, Paul Joseph. Before this morning, did I have a limit order already set up? Sure. So one of the mechanics to playing a fade on a really hot zone where I expect wicks, am I going to place a conditional order before the fact? Paul Joseph, yes. Because we have our HPMRs already on our chart, they're already there, visible, they're already defined. I can place my agro, moderate, and conservative limit orders to buy before the hot zone. In fact, it really is pretty much the only way to do it, unless we just happen to see that price not only sells off, but then sort of lingers and hangs out a bit before resuming higher. But that normally is not the response to a high impact hot zone. So yes, I will keep those limit orders to buy, which also remind me that just to mention that these 8:30 hot zone events, these are futures, micros or minis, right? It's not about stocks. It's really not about options. It's about futures, micros or minis. And it is extremely high volatility and extremely high risk. Not something that I encourage everyone to go do when they first start becoming a day trader. I would say this would be a little bit along the lines of understanding risk, being very, very fluent on your order entry platform, things of that nature, being used to sudden bursts of volatility so that that sudden burst of adrenaline doesn't take you off course in terms of the trading plan. But yeah, watch a few and then engage. But I sure do. Yeah, I sure do. Hey there, Ronaldo. Great session on the NFP event this morning. Thank you very much. I appreciate that, Ronaldo. And I appreciate it. Thank you, Ronaldo. Steve says she's everywhere. Good morning again, Steve. Yep, that's the way. Look, you know what? I get to tune in every morning, hang out in my mastery with a bunch of traders that I adore that are putting in the hard work, putting in the reps, and trying to become great traders. You all inspire me because after 30 some odd years, things can get sometimes a little stale. When I see that optimism and you all are taking advantage of the opportunity and putting in the studies, it inspires me to kind of remember what it felt like when I was first starting out. So yeah, I love it. I get to sit around and talk with you all about the markets. You kidding me? Yeah, pinch me now. All right, Delta and Pressa. Hell, hey there, how are you? What's my opinion on setting stop orders simultaneously with entries? Delta, I'm all for managing risk, but I have found not that the market's out to get anybody, but the market does move in the direction of the orders. It does tend to move in the direction of the most stops, if you will. Not because the market's trying to burn anybody, but because the market is an order filling machine. That's what it's meant to do. It's an order filling machine. So if there's a lot of orders sitting somewhere, yeah, it's going to want to head in that direction. Usually, we see this in pins. We see this on options expiration. Size is noticeable, right? So I don't like to leave unless it's a trailing stop or a break-even stop. I do not like to leave an order out there. Does it present more risk? It can, but I have found that I'm better off not doing that. So I do not actually place my physical orders, especially during hot zones, because sometimes we'll get a quick wick, we'll get wicked, we'll get stopped out, and the market snaps back. How many times have we seen that? And therefore, I think we're better off managing risk beforehand, knowing where our volatility zones are, and picking a side. Those of you that were with me in the Sector Secrets Mastery Room this morning for NFP saw we wanted to be long or nothing. Maybe there could have been a short if a certain pattern arrived. We looked at it, pattern never happened, but our preference was to be long. We had a strong preference for one direction. And I believe that one direction preference, that directional bias is really important, right? Okay. Next up is, what did I do special for my birthday? I got to spend time I got to spend some time doing things I like. I got to spend some time with people that I love. I got some more books. I got cool things that I love. I love journals. I love cool pens. And so, yeah, I'm a happy girl. Simple stuff. Ice cream cake and going to bed early. Not kidding. Dream life. Yes. Is your win rate lower on wave trades versus HPMR? Steve, they're really not comparable in terms of rates. They're both. So let me answer the broader question first. I will not use and definitely not teach a process until I have at least, usually, I say 6 months, but that's not true. It's usually years of testing. 6 months is usually a tweak to an existing indicator before I'll even bring it to the public. So it not only has to be tested, and then it's got to achieve, for me, a minimum win rate during that time of at least 60%, preferably more. So until I get those two things, I'm not even going to bring it to market, frankly. Then the second part of your question is, so again, prolonged testing, minimum win rate to even deserve to be something that I'm going to introduce you all to. Second part is wave trades are trend following and HPMRs are fades. And the win rate is good for both. It's going to exceed that level as long as, and this is such the important part, as long as I'm using HPMRs where I have clear directional bias and or a choppy market where the fade is valid. And then I'm surfing the wave when I have a trend. Surfing the wave in a non-trend is going to collapse that win rate. Surfing the wave in an up or down trend brings that win rate way up. So they're really not that different in terms of win rate. They've got to meet that minimum threshold before I'm even going to discuss them publicly. So I hope that helps. All right. Next up is, I saw no trend pre-market on the 5-minute. I agree, Alex. There wasn't. Why was I bullish? Above the line in the sand. You got it, Alex. Love it. You got it. Above the line of the sand. It was mostly neutral. And gosh, Alex, look at the recovery that we saw yesterday into the close. There is a huge wick hanging under a tiny little candlestick body on that daily time frame. That was some bullishness that certainly could not have been ignored going into today's 8:30 hot zone. So love the question. And I think it's both those things that, the neutral market environment, the wick, the recovery, right? All of that is basically long or nothing. And not in NQ. We focus on ES for the hot zone. All right. Next up, stock hands. Good morning. Do I factor in the S&P 500 trailing PE into your trading, whether it be long-term, middle time horizon? I don't. Let me say this really clearly, because I never want anyone to think just because I don't use something here in my office that it's not useful. It's not something that I consider. However, this is what I always say, gang, all of us have a foundation, right? So it's like a recipe. My mom gives me recipes for Indian food. I'm going to mess them up a little bit. When I say mess them up is there's a foundation that I know that recipe is going to yield a certain taste that I like. But I might like mine a little hotter. I might like mine a little less salty, right? So those are the tweaks. So if we all have a foundation, which is what I hope TOPS is for folks, which I hope is trend preference for folks. And then if you say, Rog, I've got a trend and I've got that PE ratio that you like, that's the tweaks that I think makes each one of us a more powerful individual trader, where we should have a solid foundation that's time tested, which is what I hope I impart. And then you say, but Rog, I like a little less or more salt. That to me is in that category of don't discard it. This is the customization. So I don't do it, but if it's working for you, oh my gosh, if it's that seasoning that you need to do to make the recipe your own and come out with an even better result, oh gosh, of course, go for it. So I don't want to discourage people when I say, no, I don't use it. I just want to make sure it's being built on a really good foundation. Next up, Marla, how are you? Raghee, on our alert for X and secrets, what do you think about adding? Ooh, so yeah, let's talk about losses. Oh, Marla, now you're talking about my favorite thing in the world. Why do I love losses so much? Somebody did say, Rog, you spend a lot of time talking about losses. Luckily, we don't have that many usually as a rule. And so I don't mind talking about losses, because when you don't have that many, you realize what a great learning opportunity it is for traders to realize how to manage risk is job number one. So am I going to add? So Marla, you probably know the word add. It's a tricky one. I kind of sort of hate it. Here's why. And I love what you're asking, because what you're really asking, Marla, if you don't mind, is, Rog, is there another setup where we can still be bullish? And the answer is not yet. Not yet. So in my mind, words matter, right? Versus, I try to program my mind to say, instead of add to a position, my reaction is there another setup? If we've broken the trend, which we have, we've broken the trend in SLX, we've broken the trend in XME. So the tides are going out on these. I need to find a relative outperformer. That may not be X. So the first question, Marla, is, does X still deserve our capital and our attention? Right? You bring up a great series of questions. This could be an hour-long discussion, but let's get to the cliff notes of it. This is the stuff that we love to deep dive in the Sector Secrets Mastery. Okay. Do we have relative outperformance on X? Is the tide going out or not? We have some tricky things here, Marla. We could definitely dive into more of that during Ask Me Anything. So this was a tough one. We looked at metals and we looked at energies. I like where we are with energies, but metals is kind of going to have to re-earn our attention and capital. So the only way to go about this is crack open the multi-chart. We'll do that this afternoon. Take a look at SLX, take a look at XME, see if something looks better than X. So perhaps it's a relative outperformer compared to the other stocks and compared to the sector. All right. So I hope that helps, gang. I hope that makes sense. All right. The other, you know what? Let me do this here real quick. I have XME up. I just noticed I had XME up. So let me just show you all what I'm talking about. So one of the things that we do is we do a very old school, I am an old school trader, right? We do a really old school way of scanning. We actually look at the stocks that are weighted together within this passive investing universe that we are all trading. We can either acknowledge it and use it or just ignore it and still look for disparate names. That's not the way the markets move anymore. And I think everyone knows that. They know that a very small number of stocks move the broader averages and move different sectors and ETFs. Is there any relative outperformance in XME or SLX looking at the tide, right? Is there any relative performance? And that's what we want to start with. And if SLX and XME are weakening, what's that going to mean to the underlying stock? It's the tide is going out. Now this boat's going to have to work overtime just to overcome that outgoing tide. So that's a great question. It's really at the heart of what I believe trading is, which is start with building that watch list first, gang. A lot of you in the mastery know we spend an inordinate amount of time building watch lists. Where are we going to look and what are we going to trade and why? And then continually sort of gut checking that symbol to say, do you still deserve to be on the watch list or not? And so I have to say, generally, Marla, I'm not going to look at metals for a little bit. Let's see how they look next week. All right. Okay, gang. Good stuff. Thank you for all the birthday wishes. I really appreciate it. Level 51 has been great so far. I will see you all on Sunday for our weekly Raghee report. We take a look at the markets, take a look at the sectors, of course, answer your questions. Thank you so much. We are coming up on, by the way, gang, so I want to thank you all. We're coming up on 2 years of Charts and Coffee. We've been doing this day in and day out. And by the way, will I have Charts and Coffee on Monday? You bet I will. We'll get ready for the week. Even though we're not open per se, we're going to get together on Monday and have a Charts and Coffee. So thank you so much for tuning in now for 2 years on our Simpler Trading pregame show. I really appreciate it. And we're going to just keep this going. Let's go for year number 3. Gang, have a great one. Be good to each other. I'll talk to you on Sunday. All right. And my mastery folks, I'll see you for Ask Me Anything, our 90-minute Q&A at 2:30 today. All right. Until then.